Uh, Good afternoon, everyone. I welcome you all to this webinar. Uh, we welcome to the chairman of the Direct Tax Committee, Central Council member C.A. Piyush Chhajar ji, Vice Chairman Vishnu Kumar Agrawal ji, and the faculty for the day, C.A. Ravi Gupta ji. Uh, सबका एक बार मैं brief introduction दे देता हूँ, starting with the chairman. Central Council member C. Piyush Chhajar ji is an experience of 25 years. Education is a BCom and FCA and DISA. Piyush Chhajar sir brings 25 years of extensive expertise as a senior partner in Chhajar and Doshi. He is an expert in tax litigation and advisory. C. Piyush Chhajar has made significant contributions to the finance and accountancy landscape on both national and international levels. Notably, he was a member of the Central Council of India from 22 to 25 and second term from 25 to 29. With these words, I welcome Chairman Piyush Chhajar sir. Second thing, C. Vishnu Kumar Agrawal, Vice Chairman of the committee, Central Council member. C. Vishnu sir is the currently serve as the Vice Chairman of the CP committee and the Direct Tax committee. Additionally, he is an esteemed member of several key committees like Standing Committee, Executive Committee, Management Committee, Finance Committee, etc. C. Vishnu Agrawal is a chartered accountant with over 2 decades of experience and specializes in income tax matters with extensive expertise in search and survey proceedings, Benami and block money proceedings, ITD proceedings, and income tax litigation. Uh, he was the former chairman of WRC of ICI for the year 2017-18, and he served 3 consecutive terms in WRC as 2010 to 2019. With these words, I welcome to the vice chairman of the committee. And lastly, I would like to introduce the faculty for the day, C. Ravi B. Gupta ji. He is the founder partner of Ravi B. Gupta LLP. He has more than 30 years of experience. He speaks on the formation of taxation, charitable trust, foreign contribution, FCRS, CSR, social stock exchange, etc. On the He has been a part of outreach programs, events organized by the Mumbai and Pune income tax departments. He contributes regularly on the subjects of NGO trusts, institutions to the WRC reference manual newsletters, Vasai branch of WRC to by giving his views on various research works towards the representation to be made to the Ministry of Law through the Charity Commissioner on amendments to the Maharashtra Public Trust Act. With these words, I now hand over to the chairman to take it forward, sir.
Thank you very much, Pradeep bhai, for your nice introduction. The moderator for the day, Pradeep Agarwal ji. Very good evening to all of you. Very respected and my vice chairman, C. Vishnu Agarwal, who is doing a great work in this direct tax committee after joining on 12th of Feb and being part of this direct tax committee. Faculty for the day, C.A. Ravi Gupta, and I was hearing your profile also. So you are speaking a multifarious personality, speaking on various different topics. Very nice to have you. Thank you very much for agreeing our invitation and addressing our members today. And you could see two ladies on our side. They were hesitant to come on the cameras today, but I told them that you should come because they are behind the scenes who are working day and day. On my left hand side, she is the secretary to Direct Tax Committee, Priya, the member of our secretariat, Rudrakshi, who are working very hard and who are involved in all technical matters which Direct Tax Committee releases. Very good evening once again to all the members. I welcome you all to this third webinar of this particular council year, I would say, after 12th of Feb. And in this last 3 months after the functioning of the council started, 2 or 3 important developments which have taken place, which I'm sure as a members you would be aware also. We have already submitted our preliminary views on Income Tax Bill 2025 to the select Committee of Lok Sabha. After that, that was as early as on 6th of March, wherein Central Council members, 6 or 7, who were the group members, who groups were formed of 40 people who suggested various amendments and changes to the Income Tax Bill 2025. They also attended to it, and we got a very good response, and there's a good listening which is happening with the Select Committee of Lok Sabha, and we are day to day interacting with them to whatever their needs are, whatever support they require, and whatever suggestions they require, we keep on giving to them. Apart from that, after 6th of March, we have already given our clause by clause analysis. Obviously, that is not in public domain because we are discussing internally, and Select Committee was of the view, let us not bring it in the public domain till the time it is discussed. But obviously, whatever changes, clause by clause changes has been given, will come to you. And I would be also happy to tell you, this is not only post suggestions, but in fact, before the Income Tax Bill 2025 was introduced, we had given a comprehensive suggestions on review of Income Tax Bill, which is available on our website page. And if you look into it, a lot of suggestions were accepted in by the department, I would say, or by the lawmaker, by legislating Income Tax Bill, by drafting it, by reducing the suggestions, making it more concise. So it has been quite interactive. Apart from this, in the last meeting, which happened on 29th of April of Direct Tax Committee, we have taken 2 more important subjects for the next 2 months to come in. And considering the time situations, as you know, Direct Tax Committee generally comes out with a guidance note on tax audit, which was revised in 2023. Thereafter, when the 43B subclause H was amended to bring in disallowance in respect of payments made to MSME, we came out with an implementation guide because we had a short time. And now we are trying to merge both the publications guidance note and implementation guide. And implementation guide would be converted and form part of the guidance note, plus further changes which have been made by the last amendment made in Form 3CD regarding clause 22 would also be looked into it, and the appropriate guidance would be given to the members through this guidance note. My only request to you, of course, we'll try to come out with this guidance note maybe in the month of July. But idea is that only my request to all the members would be, please do look into it. The guidance note, whatever is stated in the guidance note, has been upheld by various court of law time and again. For an example, on the definition of turnover, and therefore it actually serves as a ring fence to the practitioners. If you are taking any view, if you have followed any particular audit procedures as listed in guidance note, and tomorrow if you have been put to the questions, it will help you in ring fencing, answering the questions that why such a stance was taken. And therefore I always request you, the guidance note of the guidance note issued by the institute are at higher pedestal. It has an authority attached because it is approved by the council and not only Direct Tax Committee. And before the guidance note get finalized, because of being at very high pedestal, the exposure draft will also come in. My request to all of you would be, if you have any suggestions, because you would be reading guidance note when you are doing tax audit, and during your read you would have felt that something is not correct or some further clarification is required, please do write to us on dtc@ici.in. We'll definitely try to discuss that in the groups which is going to be formed and the committees level also. And when found necessary, we'll definitely incorporate that also. Apart from that, we are working on a checklist this time for the first time for income tax returns. As you all know, last week new forms have been notified. A detailed checklist would be prepared with an idea which guides the members that how they have to respond to each particular serial numbers appearing in those respective ideas. Idea is to have similar responses been given by the members. So when somebody actually reads the income tax return, which has been filed by a chartered accountant, a professional income tax preparer who actually prepares it, and it's more or less similar, and talks about certain standards which have been followed, and the disclosures which have been made are to that particular levels of expectations which a chartered accountant would have from the public as such. So my request to you, please do look into it. With this, of course, a lot of things will be coming. My only last request to you before I hand over to my vice chairman, please, any issues which you find, because I know the July season would be coming, you will get busy with your income tax returns. If you find any issue which you feel that it should be escalated to CBDT, maybe CPC or any other body, please do write to us on dtc@ici.in. You can also speak to me. You can speak to my vice chairman, Vishnu Bhai, and I'm sure whatever you write to us, whatever smallest, even an individual member writing to us, we'll definitely consider it, we'll discuss it, we'll put it before the committee, we'll put it before the experts, and if found appropriate, definitely we'll escalate to the appropriate authority. So with this, my thank you once again for joining. I'm sure today's 2 hours, which is a very important topic, and Raviji would be taking it through, and then there would be your questions which you may write to, and Pradeep Bhai, moderator, would be taking all those questions in the last. It's a very important topic. I know a lot of people are facing problems. There are a lot of questions when we go anywhere. The members do say that why department is behind charitable trust. Charitable trust. Is no more a charity because it's becoming more difficult to comply for a charitable trust. But as a grapevine, I would tell you, when we were discussing last year with a lot of bodies, including tax policy legislations, and we have been told that obviously certain institutions do misuse this, and therefore the laws pertaining to this have been made stringent. And they realize that because of this stringency, out of 196 who are genuine institutions are facing problems, but they always say that if it is facing, we'll have to catch hold of those 4 people, and therefore laws are stringent. Audit report is stringent, like 10B, 10BB has made more stringent. It is like certifying a computation of income. Just because audit report has come before, again, I hand over Vishubhai. Last year we had issued a guidance note on 10B and 10BB also. And I've already mentioned that the level of the authority attached to the guidance note, please do look into it when you are certifying those. If Ravi bhai, because you are expert in charitable, if you have any suggestions on those guidance note also, because a lot of experts had contributed to that, but obviously amendments keep on happening. We have not proposed this time to amend that guidance note, but definitely if something is missing, we may consider that, and we may also try to address that. Maybe not an amendment in guidance note, but we can come out with a supplement. So every member is free to write to us. So with this, thank you very much once again. Thank you, Ravi bhai, for joining. I would now request my Vice Chairman, C. Vishnu Agarwal ji, to kindly address the members.
Thank you, Chairman, sir.
Thank you.
Respected our Chairman, Piyush Chhajer Moderator, and the past Chairman of the Baroda branch and the Regional Council member Pradeep Agrawal ji, Ravi Gupta ji, today's Speaker, Priya ji, and Madam. Senior in the profession, ladies and gentlemen, very good afternoon to each one of you. Friends, today we have selected, before this, when Pradeep Agrawal is introducing me, he was very excited because he has done work with me 3 years in the regional council. He was my treasurer and the Vikasa chairman also. So he knows me very well. So he was reading, when my biodata he was reading me, he was very excited. Friends, today, so thank you Pradeep ji. Friends, today we have selected the topic charitable trust on taxation because in the official area, we face that most of our chartered accountant facing the problem in the taxation in the charitable trust when it will renew. So many penny things they are facing. So we have decided that this topic, today we will take the topic on the taxation of the charitable trust. And again, we have invited Ravi Gupta ji, very seasoned speaker. I think he has given more than 100 lecture on the charitable trust itself. So I welcome Ravi Gupta ji for accepting my invitation, sir. And I will not take much of the time. Only my request to each one of you, sir, if anyone want to give any lecture in the direct tax subject matter, just you write one mail to the direct tax committee. We will 100% definitely we will consider your request for the benefit of all the members across the country. Friends, I will not take much of the time and I will not stand between you and Ravi Gupta ji, because Ravi Gupta ji is the master on the charitable trust. I have heard so many times in the seminars, conferences, and at the committee, we are also doing so many conferences and seminar workshop across the country. Friends, I request each one of you, if you want to become a speaker in any seminar workshop, even in the webinar, just to write one mail to us. And definitely my chairman and myself will definitely consider your request. Friends, I will not take much of the time and I request Ravi Gupta ji to take your session, sir.
Thank you, sir.
Thank you.
Thank you so much. प्रदीप जी शुरू किया जाए.
Yes, sir. Please take forward.
So at the very outset, I would like to thank ICI and more particularly the Direct Tax Committee. And then the dignitaries, basically the chairman of the Direct Tax Committee, CA Piyush Chhajed, who's my very close friend, and CA Vishnu Agarwal, who's like my younger brother and my very close friend. And definitely, I have seen Priyaji for the first time. So I welcome Priyaji on board, and also Rudrakshi madam, who has been coordinating throughout. And just now I came across and I got accustomed to Mr. Pradeep Agarwal, who is the moderator of today's session. So thank you each and everybody on board, and thank you for giving my introduction, and thank you for inviting me so warmly on the session basically. And the best part for today, I would say, as far as I am concerned, I feel so proud today because this is the first session whereby I can see the ICI logo behind me, because I have been doing so many seminars. Of course, when we are doing it personally, physically, I mean, ICI logo is everywhere. But as far as a webinar is concerned, I think this concept has been developed very recently, because earlier when I used to take a webinar, there was no such concept कि पीछे background में ICI दिख रहा है. So ICI के आशीर्वाद के साथ आज पहली बार बात कर रहा हूँ. So that is a icing on the cake for me today. So with this, I would, start the session so that we can travel through the subject, which is, taxation of charitable trust NGOs, and then charitable trust NGOs with recent amendments. Of course, the amendments, I would say they are, the amendments have been rampant every year from 2021, 21, 22 till 24, 25. There have been many, many amendments, and the things have been changing like anything. So it has become a bit of a difficult to keep track of this. But then too, I have made the presentation whereby the participants can go through it, have a look at it. It is a detailed presentation. Of course, I will not talk in so much of detail which is not required. But one thing is for sure, that if you go through the presentation, it will give you a lot of insights, and maybe it will provide you maximum clarity. And then too, if there are some queries, the participants can directly write to DTC. They can directly get in touch with me. My contact details are there. Vishnu Agarwal ji has got my details. They can always contact me. They can mail to me, and I will definitely try to address their queries. So with this introduction, we will travel through the subject basically. And so I have made this index basically what all we are covering today. See, we will be covering from section 215 to section 10, 11, 12, 13, 12 AB, ATG, 115 TD. A lot of these sections have been introduced off late in the last 2-3 years. So we will travel through all these sections. So then we have 115 BBC. We will talk about 115 BBI. 56 210, there is a small amendment. And then we will talk about 271 AAE. 234G, which has been recently introduced, 271K, 143.3 mein there is a small amendment. We will talk about 143.3 ka amendment also. Then we are also covering 164.2, 164.3, read with 167B, which talks about the charge of tax where share of beneficiaries are unknown. And let me explain this a bit. What do you mean by beneficiaries' shares being unknown? When we talk about a public charitable trust, the shares of beneficiaries are unknown in a public charitable trust. When we talk about a private trust, which in other common words is called family trust also, over there the beneficiaries are defined, and in most of the cases the shares of the beneficiaries are also defined. But all said and done, the beneficiaries are definitely defined in a family trust, private trust, whereas in a public charitable trust, the beneficiaries as well as their shares are not defined. Then we will talk about ITR 7 and ITR 5. When to file an ITR 7 and when to file an ITR 5. There is a bit of confusion about when to file ITR 7 and when to file ITR 5. Of course, that confusion has been taken care of late. But then too, I will throw some more light on it so that it becomes more clear. Because going forward, we have got a season whereby we will have to file a lot of ITR 7s and a lot of ITR 5s. So I will definitely throw some light on it. Then last but not the least, we have been going through a lot of CBDT circulars and notifications right from 21-22, I believe, because the major amendments were brought in the year 2021. Then to give further clarity to those amendments, a lot of circulars and notifications flowed in from time to time. 22-23 also, 23-24 also. Later on, there were again amendments. Some more clarity was required on those amendments also. Then again, some circulars came, again, some notifications came. So we will try to cover the circulars and notifications, definitely the most importance of them. I will not cover all the circulars and notifications, but I will not miss the important ones. That is for sure. So, beginning with, the first section. The first section is section 215. This is the crux of, NGOs and charitable trusts and institutions, because this is the definition ka section. Now, what does 215 deal with? It deals with the definition of charitable purpose. What all is included as charity as per the Income Tax Act? We have got 7 limbs as far as charitable purpose is concerned. What are those 7 limbs? Relief of poor. Then we have education, promotion of education to be precise. Then we have got promotion of yoga. Then we have got promotion of medical relief, or rather to provide medical relief to the public at large. Then we have preservation of environment. We have preservation of monuments or places or objects of artistic or historic interest. And then finally, we have the advancement of any other object of general public utility, which deals with the charitable purposes other than the above 6, which have been precisely defined. So, this is about charity. This is about the definition of charitable purpose. Now, what are the important points as far as charitable purpose goes? The important points are that the definition of charitable purpose is inclusive, which in other words means that over the period, we will be having different objects or different limbs which will be added to this definition. Like, I will like to take you back when yoga was not introduced, or when preservation of environment was not introduced, or when preservation of monuments was not introduced. In other words, earlier we had relief of poor, education, medical relief, and advancement of any other object of general public utility. Then over the period, these 3 limbs were added at different times. So that is the reason we say that the definition of charitable purpose is inclusive and not exhaustive. Then what is the another point which I have highlighted over here? A purpose must, in order to be charitable, be directed to the benefit of community or a section of the community, distinguished from an individual or a group of individuals. Now, to define this particular punchline, what I have to say is, even if we have a larger community, at times you come across situations where you say that a particular, for example, a Jain community approaches you and they say कि भाई sir हमको एक trust बनाना है and please guide us on the subject. So when we talk about a community, it does not mean that a trust, a charitable purpose cannot be a charitable purpose if it is for a particular community, because a community itself has got many people in a community. So it is a larger section of the society, or maybe a smaller section of the society, but definitely a bigger section, I would say. So that is the reason a community of people or community or a section of person can also form a charitable trust. And not only forming, they will get the advantages of income tax. That is the sole purpose of forming a charitable trust, so that it can benefit the public at large, at the same time get the benefits from the income tax exemptions. Then we have a third point, which says not necessary to benefit whole of mankind. And very rightly so. Now, suppose if I have made a charitable trust, I am functioning in my place of office. I'm located in, say, close to Mumbai. It is Thane district. Now, if I am operating from this place, is it possible for me to serve the whole of mankind? Definitely not. Even if I am serving 100, 200, 400, 500, 1000 people, definitely I am doing charitable activities, and it can be classified as a charitable purpose. The other important point is, does charity mean providing free services? Absolutely not. Because to provide charity also we need resources, we need money, we need funds. So that does not mean that charitable services, charitable purpose can be only met by providing free services. Of course, we do provide free services, but that does not mean that all the services can be provided free or should be provided free. Then we have another important point: presence of an uncertain and fluctuating body of beneficiaries. Like we just now discussed, when we talk about public charitable trust, the beneficiaries are not defined. In other words, the beneficiaries are a fluctuating body. And that everybody will agree with me because, you know, today, if I have got some beneficiary in my charitable trust, suppose if I'm serving 10 people, that necessarily does not mean that I'll be serving the same 10 people throughout my tenure of charitable activities. Every time I will be having a new set of beneficiaries. And that is the crux of the trust being a charitable trust, or that is the most important qualification for me to get benefits from the income tax act or the income tax department or the income tax exemptions. So these are the broader punchlines. In this background, you can clearly understand that what charitable purpose means and how we are supposed to run a charitable trust. Then in this same section 215, we have a proviso which was introduced in 2008. What does this proviso say? First of all, before I go to the nitty-gritties of this proviso, it is applicable only to the seventh limb, which is the charitable trust falling under the general public utility category. When you have a trust where you have only general public utility, I mean, rather than those six limbs which were defined earlier, when your trust is falling under general public utility category, and if your trust is doing commercial activity, in other words, if your trust is selling some services or selling some goods or selling something for a cess or a fee, in that case, it will be termed as a commercial purpose, and you may lose the charitable purpose or the you may lose the exemptions available to the charitable trust. But there is one more thing to it, that the cap which has been levied recently is 20%. What is that cap of 20%? That suppose if the commercial activity, so-called commercial activity, tantamounts to generation of revenue, which is less than 20% of the entire receipts, in that case, you will not lose the charitable tag. Otherwise, you will lose the charitable tag. So that is what this proviso means. I have given a certain case laws and I have given some explanations. I mean, whoever is interested in these explanations further or the case laws, you may go through it because I'm not going into detail as far as the case laws are concerned. Now, everybody is aware that we have got two different types of organizations as of now. In common parlance, we call Section 10 organization and Section 11 organization. Now, what is Section 10 organization? More particularly, Section 1023C, 3AB, 3AC, 3AD, 3AE, and 1023C, 4, 5, 6, and 6A. This is what we are broadly concerned with at the moment. When we talk about 1023C, 3AB, these are the organizations which are running educational institutions, and these educational institutions are funded more than 50% either by the central government or the state government. So these entities are exempt from tax. Similar is the case with 1023C, 3AC, whereby you are running, medical institutions or hospitals. So 1023C, 3AC, again, funded by government more than 50%. These entities are also exempt from tax. Then we talk about 1023C, 3AD and 3AE. These are the organizations where you have got a revenue to the extent of 5 crores. This 5 crore ka limit has been amended recently. Earlier the limit was 1 crore. Now the limit is 5 crores. Certain amendments which have been introduced now are highlighted here, and these amendments are effective from the assessment year 22-23. What are those amendments in brief? 5 crore limit to be applied in aggregate and not per institution. Why this has been mentioned over here? Because earlier there were judicial pronouncements which said that if you are running 5 institutes, under under one PAN card, and the total limit is less than 5 crores, or you are not, you have even if and the total limit is less than 1 crores, then in that case you will not lose the exemption. But that particular judicial pronouncement or the lacuna in the law was misused by many organizations. So that is the reason this amendment has been brought into. Now the limit is 5 crores. Even if you have an example whereby you are running an educational institution as well as a medical institution, the maximum limit is 5 crores. Once you cross that, breach that limit, you go beyond that limit. In that case, you will lose the exemption under 1023C, 3AD, and 3AE. In that case, you have to apply under 6 and 6A, which I am covering in the next slide. So 6 and 6A, you have to write to the income tax department and take the approval of the PCIT or CIT, or take an order from the PCIT or CIT, so that you may avail the exemption under section 1023C in a broader sense. So this is about 1023C, because 4 is any other fund or institution. 1023C, 5 is public charitable or religious or charitable trusts. Now, 1023C5, everybody is aware, Ram Mandir, Ram Janam Bhoomi Tirtha Kshetra Trust. That is registered under section 1023C5. So you will understand what 1023C5 is more clearly. Then certain amendments to 1023C broadly, I would say that earlier there was a lot of ambiguity as far as 1023C and 11 entities are concerned. Certain things which were there in 1023C were not there in 11. Certain things which were there in section 11, they were not there in 1023C. So over a period of 2-3 years, first of all, 1023C was brought at par with section 11, first of all. And now, in the last amendment, effective 1st October, it has been declared that 1023C is no more required. Which in other words means 1023C is merged with section 11 entities. Going forward, from 1st October 2024 onwards, no application under section 1023C will be accepted. Any new registrations will be done under section 11. That means 1st October 2024, the time limit for you to get the order under 1023C is 31st March 2025. And you will get an approval for a period of 5 years. So that period of approval will extend up to 31st March 2029. That is assessment year 29-30. Henceforth, that is after 1st of October, after 1st of March, any application which is to be made, 31st of March, any application which is to be made under section 11 only. No applications can be made under section 1023C. Now, on this date, we are sitting in May 25. If you want to make an application under section 1023C, the window is not available for you to make any application under section 1023C. So, and for the trusts which have been approved, the sunset time is 31st March 2029. After that, after 31st March 2029, you have to apply under section 11 or section 12A to be precise. Then we are coming to the key provisions related to 11, 12, 13. Of course, everybody knows that these are only 3 sections. But these 3 sections, I have heard from many officers from the income tax department and many of our, professional colleagues. They have always been saying that these are the most notorious sections in the entire act. Anyways, we have to go through it. We have been learning these sections. We have been improvising ourselves day in, day out. And those who are not practicing into these sections, they are outsourcing their work to people who are practicing in the NGO sector. So, but let us study today what 11, 12, 13 in today's parlance means, including all the amendments. Time and again, whatever amendments are there, I have covered all the amendments over here. So, everybody is aware what 11.1 says. 11.1 talks about the application of funds towards the objects of the trust. And that application has to be done to the extent of 85%. and 15%, not more than 15%, can be accumulated for a period of perpetuity, which is, in other words, statutory deduction, you may call it, or statutory accumulation, you may call it. So that means when we are talking about 15% standard deduction, it is a good benefit that the Income Tax Act is providing to charitable trust NGOs to scale up their operations for the benefit of the public at large. So this is about 11.1. Many amendments have been done. Yes, of course. One more thing I would like to mention over here. The income, when I'm talking about the income, I'm talking about the revenue part of it. When we talk about the corpus donation is exempt from tax. It is a capital receipt. It is not traveled through the income and expenditure account. It straight away goes into your balance sheet. So over and above the corpus donation, whatever is received, you have to apply 85% towards the objects of the trust, and the remaining 15%, you do not have to pay any taxes on this. Then now this particular provision is applicable. Most important condition is the entity should be wholly charitable and a religious trust. Partly charitable or partly religious will not be recognized for this particular exemption or deduction or the benefit from the Income Tax Department. In other words, this particular deduction or statutory accumulation is available only to wholly charitable or religious trusts. So 11.1b earlier was covering, partly charitable trust. Now partly charitable and religious trust, which is no more applicable nowadays. 11.1c talks about your money to be spent outside India towards the objects of the trust. Now that is not allowed. To spend money outside India is not allowed, subject to two conditions, or subject to two exceptions rather. If your trust is formed 1/4/1952, we must be having very few trusts which are formed before 1/4/1952. Then the trust must be into the objects which are for the international welfare of India. And the other thing is, over the period, if you feel that certain object or certain activity interests India, in that case, you can go to the CBDT, take the approval from CBDT, justify your purpose of spending money outside India, you will get the permission, and then only you can spend money towards the objects of the trust outside India. Otherwise, you will not be allowed to spend money outside India. You are not allowed to spend money outside India. Then we talk about 11.1d. 11.1d says corpus donation, any voluntary contribution with a specific direction, that this contribution, this voluntary donation should form part of the corpus fund, is exempt from tax. It has not to be included in your income and expenditure account straight away. So this is about 11.1d. And other conditions to be met so as for you to avail the deduction available under section 11 is the trust institution should be registered under section 12ab. Earlier this section was 12AA. Effective 1/4/2021, AA has been replaced with 12AB. You have to maintain books of accounts and get it audited under section 12AB of the Income Tax Act. So this is one more condition which has to be met. Then there are a few explanations. I will take an example to explain these explanations. What are these explanations? Let us take a practical example whereby you are unable to spend 85% of the total income earned or accrued during a financial year. Do you have any remedy available? Yes, we have a remedy available, and the remedy is there in the explanations. Now let us take one more case whereby you have received funds on, say, 31st of March. Suppose you receive an amount of rupees 10 lakhs as donation on 31st of March 2025. Now what do you feel? Can you spend that amount on the same day? You may or you may not. In most probable circumstances, you will not be in a position to spend that amount because it is a huge amount on that particular day, on one day. So what remedy is available to you? You can file form number 9A, taking the shelter of these explanations which are there on your screen. You can file form number 9A. You can intimate the Income Tax Department saying that this amount I have received on 31st March and this amount has to be spent on projects or objects or activities to be executed in the coming financial year. It is just an intimation. You file form number 9A and you say that I will spend this money in the coming financial year. You need not explain, it will not be scrutinized, but you have to spend that money in the subsequent financial year. If you don't spend the money in the subsequent financial year, it will be taxed at maximum marginal rate under the present provisions. There is one more situation whereby you book an income. What can be an example for that? Interest accrued on fixed deposits. Or somebody telling you कि सर मैं 10 लाख का डोनेशन आपके ट्रस्ट को दूंगा. You have to book that income. That is an accrued income to you, but you have not received it. Suppose you receive the income in the subsequent year. Then you have to file form number. You receive the income in the subsequent year. But in the present year, when the income is accrued to you, you have to file form number 9A so that that particular amount can be carried forward to the next financial year or till the financial year in which the income is received. You may receive the income in the subsequent financial year or even in the next financial year. In other words, in the subsequent financial year or in the year subsequent to the subsequent financial year. So in that case, you have to spend that money in the year of receipt or in the year subsequent to the year of receipt. So over there also form number 9A comes to a rescue. But again, you have to spend the money as defined in the law. If you don't spend the money, it will be put to tax at maximum marginal rate. Then we have explanation 2 to section 11.1. What does this say? Any trust making a corpus donation to another trust will not be allowed as application towards the objects of the trust in the relevant financial year. Now, earlier what used to happen is the trust was making corpus donations to another trust. That was leading to round tripping of funds. Again, the sole purpose of the money to be spent towards the objects of the trust was not met. Why? Because if you have a circle of 5 trusts and you receive X amount in a particular trust, what you will do is X minus 15, 15%, you will donate to trust B. Trust B will do the same thing, trust C will do the same thing, trust D will do the same thing, and trust E will do the same thing. Ultimately, no money will be spent towards the objects of the trust. All the donations will be capitalized. And the sole idea of coming up with a trust is nullified. So that is the reason the department came up with this amendment from the effective financial year 2017-18, whereby one trust making corpus donation to another trust will not be treated as application towards the objects of the trust. Then we have explanation 3 to section 11.1, which says that certain expenditures will be disallowed. Number 1, making payments without deducting tax at source, TDS. 30% of such expense will be disallowed. Making cash payments exceeding rupees 10,000 will be disallowed. Suppose if an expense is accrued, you pay that amount in the subsequent financial year, but the mode of payment is cash and the amount is more than 10,000 rupees, that amount will also be disallowed. So this is explanation 3 to section 11.1. Then, by the Finance Act 2022, with retrospective effect from 1/4/2021, an explanation was introduced whereby places of worship like temples, church, mosque, gurudwara, notified under section 80G2B, can treat a particular donation as a corpus donation. In other words, the trustees can decide whether the donation can be treated as corpus donation or not. This is an exception to section 11.1D. 11.1D says that there has to be a specific direction, whereas this particular explanation says that the trustees can themselves at their own discretion treat a particular donation as corpus donation. And why this has been brought? This has been brought because, I can, think of an example in the form of Ram Janambhoomi. Because during that period, a lot of donation was collected and the amount was huge. And there was a lot of amount which was to be spent over the years to come, maybe around 5 years, 10 years, 15 years, 20 years down the line. So that is the reason this amendment has been brought in, to empower the trustees to treat a particular donation as a corpus donation, because the money was collected from pan India and even abroad also. It was difficult to have direction letters. So that is the reason they came up with this explanation. And they treated some donations, or maybe the larger part of the donation, as corpus donations. But there are certain conditions also prescribed to this. What are those conditions? Corpus to be applied for the purpose for which it is accumulated. No donation to be made to any other person. Corpus should be separately identifiable, and the money should be invested as per the mode specified under section 11.5. Then we have 3B to section 11, which says that if you don't meet up with the conditions, you will be put to tax. Then there are certain few amendments which have been brought by the Finance Act 2021, effective 1/4/2022. These amendments are regarding amount spent from the corpus or the amount spent from loans and borrowings. Now, let us travel back first so that we can understand the provisions correctly. What used to happen first? Now, if there is a shortfall in the receipt as compared to the expenditure in a particular year, what we used to do, we used to use the money from the corpus or from the reserves of surplus, or we used to borrow money from the trustees and then spend towards the objects of the trust. So this was again leading to deficits in the income and expenditure account. At times it was leading to erosion of corpus, and it was leading to many other wrong practices. So that is the reason the department came up with these amendments, and they said that if you are using the corpus to meet the day-to-day expenses of your trust, you are spending the money towards the objects of the trust, it will be treated as application towards the objects of the trust only when you repay the corpus, or only when you deposit the amount as per the mode specified under section 11.5. And as far as loans and borrowings is concerned, it will be treated as application towards the objects of the trust only when the loans and borrowings are repaid. So earlier, when this amendment was brought in, effective 1/4/2022, there was no time cap. Cap. I mean, there was no time limit prescribed that within what time you have to, reimburse the corpus or to repay the loan. And then they said that this is something which we have to check. So they came up with the time cap basically. And that time cap is 5 years. That is, in other words, if you are using money from the corpus to spend towards the objects of the trust, that money has to be compensated back to the corpus within a period of 5 years. The necessary changes have been made in ITR 7 and form number 10B and 10BB also. Similar is the case with loans and borrowings. You have to repay the loan within 5 years. And to the extent of repayment, that amount will be treated as application towards the objects of the trust in the year of repayment. This is about 5 years. We have discussed 5 years ka period. Now, but suppose that there is one more thing, that if the amount which you have spent is not meeting the criteria of application towards the objects of the trust, then if you compensate the corpus or you repay the loans and borrowings, that will not serve good. That will not be treated as application towards the objects of the trust, because at the very outset, when you spend the money towards the objects of the trust, that was not qualifying for application towards the objects of the trust. So when you compensate, it will not be treated as application towards the objects of the trust. or when you repay, it will not be treated as application towards the objects of the trust. Then there is an amendment regarding inter-charity donations. Inter-charity donations, if you are making inter-charity donations, there is an amendment that only 85% of the donated amount will be treated as application towards the objects of the trust. In other words, the 15% available as per section 11(1) will be disallowed to you or denied to you. Now, I have been receiving many queries that whether when we are sponsoring education of children in a particular school, we generally follow a practice whereby we tell the management that हम 25 बच्चों का फीस देंगे और 5,000 rupees per बच्चा देंगे. So that amount comes to somewhere around 1,25,000 rupees or something, and we make one check or one payment to the educational institute, which is again a charitable trust. So what do you feel? I mean, should that amount be, that the 15% should be denied for that particular amount or not? In my understanding, no, because we are sponsoring the education of individual children. We are making a payment to a charitable trust is fine, but the beneficiary is not the charitable trust. The beneficiaries are the individual students and their families. So over here, 15% will not be disallowed to you, but of course you have to keep proper documentation to justify your case. So this is about inter-charity donation. Then one more amendment, set-off will not be allowed. What does that mean? That suppose if in a particular year there is a deficit in the sense you have received less income and you have spent more. Earlier there was a situation whereby the judicial pronouncements had said that you can carry over that deficit towards and adjust towards the. But there was a lot of ambiguity in this because the relevant income tax forms were not having the provision to adjust that amount or to adjust the deficit against the income of the current year. Adjust the deficit of the previous year against the income of the current year. So to plug out that ambiguity, now the department is saying excess application of an earlier previous year will not be allowed to be carried forward to be adjusted against the income of the subsequent financial years or the surplus of the subsequent financial year. Then consequences of not using the amount accumulated or earmarked by filing form number 9A. As I've already told you, the consequences are you will be put to tax at maximum marginal rate. So this is what subsection 1B says. Then we have 11.2. What is 11.2? 11.2 is a section which allows you to accumulate or earmark funds for a period of 5 years for certain major expenditure which the trust wishes to incur in the years to come. But mind well, when you file form number 9A, specificity is not required. But when you file 11.2, specific clauses or specific objects have to be mentioned. If you don't be specific, then there is a chance that the deemed application may be disallowed and you will be put to tax to the extent of the amount accumulated by filing form number 10, by invoking section 11.2. So you've got to be specific, but yes, plurality is allowed. You can have 2 or more objects. You can have 3 or more objects. But you can never say that I will like to spend this accumulated money towards the objects of the trust as mentioned in the trust deed or any other constitutional document for that matter. So specificity is required, but plurality is allowed. Specificity is required and plurality is allowed. You may write more than 2 objects. Then we are mentioning over here, we are saying that the deadlines have been revised to file form number 10. Now, what is the deadline? 31st August. There have been a circular, I think last year, whereby they said that you can file form number 10 before filing the income tax return. But again, that circular was for last year. Some school of thought says that in the previous year also, last year, that is assessment year 24-25 also, that circular was applicable, but we tried to follow the deadline of 31st August because the year of applicability was not mentioned in the circular. Even this time also, we will try to meet the deadline of 31st August, just in case there are a few trusts whereby we may avail the opportunity of filing before 31st October. Otherwise, we will stick to the deadline of 31st August till there is ample clarity on it. Of course, 13.9 says that you can file before the filing of income tax return. But then too, clarity is required. Then audit forms are to be filed by 30th September. Income tax returns are to be filed on or before 31st October. Belated return can be filed up to 31st December. (11.3) says that if you violate the conditions of section 11.2, you will be put to tax at maximum marginal rate in the year of violation. Suppose if you don't accumulate the funds, if you don't use for the purpose for which the amount has been accumulated, if you don't spend the money before the designated time, that is before the period of 5 years, or before the period for which the amount has been accumulated. And mind well, when you are filing form number 11.2, my recommendation is you should avail the maximum time. You should avail the maximum time, that is 5 years. You may spend the money before 5 years. If you can spend it within 1 or 2 years, it is fine. But at times you feel that you can spend the money within 2 years, you accumulate for a period of 2 years. And if some unforeseen circumstances erupt, in that case, it can lead to violation. So it is better to avail the maximum time limit and then you may use it before 5 years. So this is about 11.2 and 11.3. Then we talk about 11.3a, which allows you to modify the objects of the trust, modify the objects mentioned in form number 10. Now, you accumulated the amount for a particular purpose, for example, and then it becomes, by circumstances, it becomes difficult to attain those objects. I can see an example of COVID. You must have accumulated the amount by filing form number 10 by invoking section 11.2, but somehow you were not in a position to spend the money towards the objects of the trust because of COVID and other unforeseen circumstances. In that case, you can write to the assessing officer. You can tell them that this is the situation. I am not in a position to spend the money on the objects mentioned in form number 10 at the time of filing form number 10. Please allow me to spend the money on so and so objects. Of course, those objects are to be covered by your constitutional document. But after looking into the merits of the case, the income tax officer will definitely allow you to spend money on the objects other than the objects mentioned in form number 10 at the time of filing the form number 10. Then we talk about 11.4 and 11.4a. 11.4 and 11.4a talks about business entities. These business entities ka thing is applicable only to the 7th limb of section 215, which we discussed at the very opening. And when we read 11, the starting line is income from assets held under trust. Any business undertaking can also be termed as assets held under trust. So, but that income has to be plowed back for the benefits of the, benefits of the public at large. Otherwise, the income which is generated can be put to tax at maximum marginal rate. Thanti Trust decided in 2001 was a landmark judgment, which also said that even if you are doing something which is not incidental to the objects of the trust, but the income generated from that particular thing or that particular non-incidental activities is used to meet the objects of the trust or used to spend the money on the objects specified in your constitutional document of the public charitable trust, that will also be allowed. But of course, of late we had three judgments from the Supreme Court Noble Education Society, and then we had one more judgment regarding Ahmedabad Urban Development Authority. Both these judgments, there was a quantum shift. It was in absolute contradiction to Thanti Trust, decided in 2001 by the Supreme Court. Now, with the advent of these two judgments of late, I believe in 2023, while after these two judgments, there has been a lot of change. Now, the character of the income and the character of the spending both are verified. Both these entities were 1023C and 1023C entities. One was 1023C and one was 1046. The Supreme Court laid down a roadmap whereby it said that for these entities, you have to verify the character of income also as well as the character of expenditure also. Whereas in a Section 11 entity, only the character of expenditure is verified. So this is about business undertakings. One more very important point, we used to receive queries whereby people used to ask us that are we supposed to get the accounts tax audited under Section 44AB? But as far as charitable trusts are concerned, audit under Section 44AB is not applicable. We are talking about Section 11.5. We are talking about Section 11.5. 11.5 is the modes specified for investment. Now, corpus has to be invested as per the mode specified under Section 11.5. Amount accumulated by invoking Section 11.2 has to be invested as per the mode specified under Section 11.5. These are the modes which are specified. The participants may go through it, or whoever is looking at the recorded lecture later on may go through it in detail. I am not discussing the modes. I will throw light on only a few highlighted ones. One is deposit in any account. There is a lot of confusion at the year end. Sir, there is balance lying in the current account or the saving account. Are we supposed to buy FDs or not? So, amount lying in current account as well as the saving account in a scheduled bank is enough compliance. It is not necessary that you have to purchase FDs. Only then you can qualify under Section 11.5. Only if there is a balance in your current account as well as a saving bank account, that is enough compliance under Section 11.5. Then immovable property also classifies under Section 11.5. Then there is one more item which I have highlighted: investment by way of acquiring equity shares of a depository. At the moment, we have just one depository which is listed, and that is CDSL. Then last item, stock certificate as defined by Sovereign Gold Bond Scheme 2015. So if you are investing in sovereign gold bonds, you qualify, you are complying with Section 11.5 over here also. I have given two case laws to justify this particular investment. I will just run through it. The ITAT Mumbai, in the case of All India Rubber Association, decided shares of Section 8 company shall not be treated as investment, because when you invest in a Section 8 company, you are not entitled for any income. And 11.5 are the modes where you receive income. Then ITT Delhi, in the case of ACIT exemption, Circle 11, Delhi versus Indian Broadcasting Foundation, what is the judgment? Held that where a charitable institution deployed its funds is in equity of a non-profit making wider objectives of public charitable nature on account of central government policy, exemption cannot be denied. You are doing something to meet the central government policy. That is the reason, even if you are investing in Section 11.8, Section 8 company over here, it is stated that you have complied with Section 11.5. 11.6 talks about depreciation. Everybody knows that you cannot avail both the benefits. You cannot debit the entire asset cost to the income and expenditure account as well as claim depreciation. Earlier, it was happening so. Then there was an amendment. And now the present situation is either you can, if you are debiting the entire cost of your asset to your income and expenditure account, you will not be entitled to depreciation. Then we have Section 11.7, which says that you can either avail 1023C or 1046 or the Section 10 benefits, or you can avail Section 11. Earlier, people used to claim both. If 1023C was suiting them, they were filing returns under 1023C. If Section 11 was suiting them, they were filing returns under Section 11. But now you can do any one of the two. In case, if your trust is getting notified under Section 1046, and if you want to avail the benefits of Section 12, when you are getting notified in 1046, 12A will become redundant. But if you want to go to 12A only, you have to again make an application under Section 12A, and in that circumstance, 1046 will become redundant. So that is what 11.1 says, 11.7 says, sorry. Then we have explanation to Section 11, sum payable by a trust to be considered income during the previous year in which such sum is actually paid. Expenses provided on an accrual basis will not be allowed as application towards the objects of the trust. It will be treated as application towards the objects of the trust only when the amount is actually paid. And if such amount is already claimed in the earlier years, it cannot be claimed on payment basis, and very rightly so. 12.1 talks about voluntary contribution. 11.1 was talking about income from property held under trust. What does 12.2 talk about? 12.2 talk about value of services provided to persons referred to in Section 13.3. 13.3 is specified person. Now, what does Section 12.2 say? That if you are an educational institute, if you are a medical institute, and if the specified person avails the benefit either of education or of medical, in that case, only to the extent of the concession provided to the specified person or the value of services provided free shall be added to your income. 12A 1AC was the new section introduced effective financial year 21-22, whereby the applications for registration has to be made. There has been a absolute shift as far as registration goes. Earlier, the registration under Section 12A was issued given for perpetuity, but now it is given for a period of 5 years, and now it has been revised to 10 years, subject to certain conditions. Coming to 12A 1AB, it talks about books of accounts to be maintained. Earlier, books of accounts were not specified, now they are. By notification 94, books of accounts are specified. Then we talk about 12A 1BA, return of income to be furnished in accordance with Section 139(4)A, allowed under Section 139(1) or 139(4). Sorry. Proviso to Section 12A2 talks about the validity of registration. When you are obtaining a registration under Section 12A 1AC1, your registration will be effective from the year when you were first registered under Section 12A. Suppose if you had a registration from 2015, and when you avail 12A 1AC1, your registration will be considered as applicable from the financial year 2014-15 till the year it has been granted now. In the present circumstance, it is up to financial year 2025-26. Then, when you are going for a conversion from a provisional registration to a regular registration, when you get a registration under regular registration, that is 12A 1AC3, the registration will be effective from the first year from which the provisional registration was granted to you. For example, if you obtained a provisional registration in 2021-22, then you applied for a regular registration and you successfully got the registration, your 12A registration will be effective financial year 21-22. That is the year from which the provisional registration was first granted to you. Then we have 12AB1, procedure for passing an order of registration or rejection once satisfied about the genuineness of the activities and compliance with other requirements. Also provides for the period of validity of the registration. Now everybody is aware. I have prepared a chart also in the later slides regarding the effectiveness of the registration, the period for which the registration has been granted, then the timeline within which the order has to be given by the income tax department, either rejection or approval as the case may be, or registration granted. Everything has been mentioned in the chart, so I'm not going much into detail. That chart is self-explanatory and each and every one can easily understand from that chart. Then we talk about 12AB3, time limit for passing order granting registration under serial number 27. So that you can again refer to the chart. Principal Commissioner to call for the documents or information. If he notices specified violations on receipt of reference from the AO, this amendment has been introduced by the Finance Act 2022 effective 1/4/2022. What does this mean? Actually, there are three ways whereby a case can be referred to the CIT or the PCIT for cancellation of 12A registration. One is the income tax assessing officer, the other is the commissioner himself, and the third is the risk management strategy available with the income tax department. If they flag up certain case, that case can be referred to the PCIT. He will verify the credentials of the case, and if he feels that there is something hanky-panky happening, in that case, he may reject the 12A registration which has been granted to you. Specified violation. Explanation to section 12AB4. Specified violation has again been introduced of late. Finance Bill 2023 with effect from 1/4/2023. Earlier, all the violations were scattered throughout the sections. Now, the income tax department has, brought all the specified violation under one roof. And what is considered to be a specified violation? I will just run through those violations. Income applied for objects other than the objects for which the trust has been formed. Income from activities not incidental to attainment of objects of the trust, and separate books of accounts have not been maintained and they have not been audited. Then we have non-genuine activities, non-compliance under any other law for the timing in force. Now, wherever, all over India, we don't have a charity commissioner's office or a regulatory body throughout pan-India. We have a regulatory body in Maharashtra, and the regulatory body is the charity commissioner. We have an act in place, Maharashtra Public Trust Act. If there is any non-compliance, that is the major act which is concerned with the NGO sector in Maharashtra. If there is any non-compliance under the Maharashtra Public Trust Act, that will fall under specified violation. And for that matter, any other law. The other laws may be profession tax laws. The other law may be GST. Many other laws. Wherever there is non-compliance, and if that non-compliance is material to the attainment of the objects of the trust, in that case, it will fall under specified violation, and the department may either not grant you 12A registration, or the department may withdraw the 12A registration or reject the 12A registration which has been granted to you. Then we have application furnished by the trust institution is not complete. Now, this was a bit of a draconian provision falling under the specified violation, which has been taken care of in the last amendment. And now they are saying that even if the trust is, the application is incomplete, and if the information provided is incorrect, without a mala fide intention, in that case, it will not fall under specified violation. Then we have applied any part of its income from private religious purpose. Yes. Applied any part of its income for benefit of any particular religious community or caste. Yes. All this will fall under specified violation. Then we have 12AB5, specified date means to pass the order within 6 months from the end of the month, end of the quarter in which the notice was first received. This is about amendment in 143(3), whereby the matter is referred to the PCIT regarding some malpractice happening in the NGO sector or in a particular trust. In that case, the PCIT will pass the order within 6 months from the end of the quarter in which the representation has been made, or if the PCIT has taken suo motu cognizance of the violation, if any. Then we have a certain amendments to 12AB4. That 12AB4 we have already discussed that even if the application is incomplete or certain information is incorrect, without a mala fide intention, it will not be treated as specified violation. And this will be effective from 1/4/2025. Coming to the applicability of Section 13. Section 13 is an exception section. Applicability of Section 13 arises only when an organization is eligible for exemption, that is, an organization is registered under Section 12A. Section 13 has been enacted as an exception to Section 11 and thereby the benefits which are otherwise available under Section 11 and 12 will not be available under the circumstances stated in Section 13. Just a minute, sir. कुछ मिस हो गया शायद. हाँ, ये है ना. ये था ना. Sir, my presentation is. Can you see my presentation?
हाँ सर, वी कैन सी.
देख सक रहे हैं आप presentation?
हाँ जी, देख सक रहे हैं.
हाँ. शेयर करिए क्या? You are screen sharing. हाँ, ये करें. एक 2 मिनट है सर, मेरा आई एम नॉट इन अ पोजिशन टू सी माई स्क्रीन.
ओके, बट वी आर एबल टू सी. गुप्ता जी.
यस सर. ठीक है.
ऐसा तो एक बार लॉग आउट करके वापस री लॉग इन.
नहीं सर, हो जाएगा. एक मिनट खाली. नहीं, एक मिनट. नेक्स्ट मिनट बाद.
अभी स्क्रीन पे जो आप 33 नंबर की स्लाइड पे है गुप्ता जी.
बुलाया. जस्ट अ मिनट सर.
हाँ, जो हमको दिख रहा है वो 33 नंबर का स्लाइड दिख रहा है.
हाँ, पीपीटी तो मेरा कैसे नहीं दिख रहा है. शेयर स्क्रीन.
शेयरिंग है अपना स्क्रीन. नहीं तो
स्टॉक शेयर कर देना. वो बड़ा कर लो। हो गया ना ये स्टॉप शेयर कर वापस।
तब तक ऐसा हो तो कुछ एक आध दो क्वेश्चंस लेना है गुप्ता जी।
हाँ हो गया सर।
हाँ, हमको दिख रहा है स्क्रीन।
वैसे तो क्वेश्चन ले सकते हैं सर, बताइए कुछ है तो।
हाँ, यानी अगर
नॉट
जो
अ
लेना
प्रॉब्लम।
है तो
नहीं अच्छा रहेगा, क्वेश्चन ले लेंगे तो थोड़ा सा मतलब ट्रैक चेंज हो जाएगा।
अभी 33 नंबर की स्लाइड पे आए हैं।
हाँ आगे वही स्लाइड है सर मेरा, अभी
हाँ
आगे से।
जी। एक क्वेश्चन है कि एटीजी डिडक्शन इज नॉट देयर इन द न्यू टैक्सेशन स्कीम, देन व्हाई एटीजी अप्रूवल इज नीडेड?
नहीं ATG, we are making representations to the department regarding this also, that now in the new tax regime ATG has become more or less irrelevant. And with the increase of limits to 12 lakhs, which is applicable from this current financial year, that is financial year 25-26, the जो relevance of ATG has reduced reasonably. But then too, only one relevance which I can see is कि if you want to opt for CSR donations, CSR donation में you have to file CSR1, you have to obtain the registration from the MCA, but for that particular thing, the primary condition is you should be registered under Section 12A and you should have an approval under Section 80G also.
ठीक है।
तो अगर CSR
Second-
लेना है तो डेफिनेटली ATG का हमको अब अप्रूवल लेना पड़ेगा।
सेकंड क्वेश्चन है कि वेदर ट्रस्ट कैन मेक फिक्स्ड डिपॉजिट्स विद प्राइवेट कमर्शियल बैंक्स, वेदर इट विल कॉम्प्लाई 11(5)।
प्राइवेट कमर्शियल, टू बी प्रिसाइज शेड्यूल्ड बैंक्स अगर है, फॉर एग्जांपल प्राइवेट कमर्शियल बैंक्स इन द सेंस, लेट अस टेक एन एग्जांपल ऑफ ICICI बैंक. ICICI Bank is a scheduled bank.
हाँ,
You can invest in ICICI Bank.
ओके।
It has to be a scheduled bank.
शेड्यूल्ड बैंक।
Yes, sir.
फिर वेदर
जैसे हम
ऑटोनॉमस।
ये कहें कि भाई फॉर एग्जांपल लेट अस से कोऑपरेटिव क्रेडिट सोसाइटी. Now
हाँ।
cooperative credit society is not scheduled in the RBI schedules. So there you cannot invest.
If I correctly recall, Cosmos is a cooperative, scheduled cooperative bank.
Yes, you can invest.
So we can invest being a
Yes.
cooperative, but also as a scheduled bank.
It has to be a scheduled bank. If it is a scheduled bank, you can invest. Yes.
Achha.
Yes.
Second question is whether an autonomous body just like FRI is mandatory to require registration under Section 1023C, where whole financed by the central government of India.
No, what is that organization into basically? Is it into education or is it a medical institution? Now, if it is an educational institution, then it falls under 1023C3AB. Or the specific FRI, which I don't understand the full name of that particular organization.
I also don't understand
That
regarding
is the
that.
reason. But we'll have to, dive deep into Section 10 to find out whether that particular organization is falling under any of the Section 10, Section 10 subsections, basically. If it is falling under that, definitely it is exempt.
Okay.
Yes.
Second question is, sir, there are a lot of questions. तो जब भी आपको शिफ्ट हो रहा है तो आप बता देना। तो NGO registered under 1860 Society Registration Act, but PAN is given as a trust, being T as a fourth letter in
Right.
PAN, given though 1860 registration certificate is given. What is to be done for this?
See, generally what happens is कि when you have a registration under Society Registration Act 1860, and when you go for an application of PAN, in our common understanding, we have seen that the intermediary who is there to allot the PAN or who is facilitating the issuance of the PAN, they generally say that this will be treated as association of person, AOP.
Okay.
You get a fourth letter as T only when you have a trust deed or you are registered under a local trust act. For example, if in Maharashtra Public Trust Act, we have Maharashtra Public Trust Act and trust deed is made, so that we can register ourselves under Maharashtra Public Trust Act. So in that case, if you make an application and if you give your registration certificate along with the PAN application, you will get the fourth letter as T. Otherwise, you should get A as the letter if you are registered under Society Registration Act. But irrespective of whether you get a A or a T, the income tax department has nowadays made a change in the fact that when we are saying that ours is an association of person, but when we approach for 12A registration and we tell the authorities that it is a charitable society, in that case we are eligible for 12A registration. That is the bottom line. Now, suppose if you get a A letter whereby it is termed as association of person, earlier it was becoming a challenge कि भाई आपके association of person को हम 12A कैसे दे?
जी.
But that has been checked by the income tax department now. But I am surprised by this query that if you have Society Registration Act, how can you get T? You should ideally you should not get T. You should get A as the fourth letter.
Okay.
Yes.
Yeah.
Yeah.
Second question is trust established before 1961 and filing ITR regularly is for the Jain Mandir.
Right.
They run Bhojnashalaya and community hall with rooms for their program and for programs of their member with normal charges. Can the said trust claim exemption under the Income Tax Act?
No, but now, first of all, the constitution has to be seen, even if the trust is made before 1961. Even if the trust is made before 1961, it has to be seen whether the constitutional document says that it is for the benefit of the public at large, number one. Number two, has the trust obtained 12A registration? If the trust has no 12A registration, they cannot claim exemption under Section 11. It will be treated as a normal AOP and will be put to tax accordingly.
Okay.
Yeah.
Yeah, there are few questions regarding the video recording and PPT material. So
Yeah.
PPT material will be once the Ravi sir will share to us, it will be shared to the committee and committee will in turn share to the participants who have registered with them.
Right.
Second question was regarding the video recording and the where I can see later on in future. So this whole webinar will be available on the ICI TV after 2-3 days. So any participants, any point of time in future, they can visit to the ICI TV and get the access to it. Now, sir, question to you: how can we may say yoga and preservation of forest and wildlife is charitable, and how it can include in charitable activity?
See, generally now these are the activities which are included in the definition of Section 215. Now, first and foremost, these activities being included in the definition of charitable purpose itself says that you can form entities whereby you can specifically carry out activities under these heads and the income arising from that will be exempt from tax. For example, let us take an example of yoga. Now, if you are running a yoga institute and the benefit which is imparted to the public at large, that itself is treated as a charitable purpose. So when it is treated as a charitable purpose, whatever income generated from that particular activity, suppose if you are conducting yoga classes and if you are charging some nominal fees, or maybe you are charging a good amount of fees, and that amount is again used for the promotion of yoga. So that will totally fall under charitable purpose and the income will be exempt from tax. And
Sir,
yeah, tell me, sir.
Their follow-up question was their yoga, preservation of forest and wildlife.
Yes, preservation of forest and wildlife. Again, preservation of forest and wildlife, to be more precise, preservation of environment.
Yes.
Now, environment has become a big issue. Now, let me take an example that if you are doing something for the preservation of environment under your charitable trust, if you come up with a charitable trust, I'm dealing with many charitable organizations who are specifically dealing with the subject of environment. Now, that anything related, any income generated for preservation of environment, and if the surplus is again plowed back to that particular activity of preservation of environment, is totally exempt from tax. And mind well, it is not hit by the proviso to Section 215 also. That means you can do commercial activity provided it is incidental to the objects and the surplus generated from those particular activities or that particular activity is again plowed back for the preservation of environment and wildlife, as your question says.
Yes, sir. Next question is income accumulation of 15% allowed till perpetuity. Is application of accumulated 15% not required to be applied within a period of next 5 years?
No, not required to be applied. Not
Okay.
required to be applied. It can be accumulated for perpetuity.
Second question, form number 9A was filed in assessment year 24-25 and the amount for which form 9A was filed was actually spent in assessment 25-26. My question is under which clause of form number 10BB it is to be shown in AY 25-26. Should I repeat, sir?
Yeah, please.
Form number 9A was filled in AY 24-25
Right.
and the amount for which form 9A was filled was actually spent in AY 25-26 assessment year 25-26. The question is under which clause of form number 10BB it is to be shown in assessment year 25-26.
25-26, you mean to say when the amount was applied towards,
Yeah,
that
actually
accumulation
spent.
was.
Yes.
Yes, yes. Because generally, sir, what I am doing is 10BB is not filed by me, in my office. I am very
True.
poor at compliance. But what the technical aspect which I can tell you is, you have to add back that particular amount in your form number 10BB to the income which has already been earned in assessment year 25-26.
Okay.
Because that amount was accumulated in the year 24-25.
Yes.
Suppose you have accumulated, say, 1 lakh rupees in the assessment year 24-25. And in 25-26, you have got a certain income of, say, 10 lakhs. Plus the 1 lakh which was earmarked in 24-25, that has to be carried forward for the assessment 25-26. And the entire application of 10 plus 1, 11 lakh has to be shown in that particular financial year of 25-26 assessment year, rather, to be precise. But of course, the particular clause I will not be in a position to tell you because I'll have to look at the form first.
I do agree, sir.
Yeah.
Next question is if there are no specific directions from all the donors to the NPO and the NPO is not willing to treat any part of the donations so received as corpus, is it still necessary to build corpus fund?
No, not required. Definitely. The primary condition for a particular donation to be treated as a corpus donation is that you should have direction from the donor. You should have a direction saying that this money should be treated as corpus donation, except the ATG2B explanation which I just explained. That is again in the case of notified hospitals and places of worship. But otherwise, there has to be a specific direction. Only then it can be treated as corpus donation. Otherwise, it has to be treated as general donation, which is to be reflected in your income and expenditure account.
Next question is what is the difference between Form 9A and Form 10?
Form 9A, Form 10 can be accumulated by filing Form number 10. You can accumulate the amount for a period of 5 years. Whereas by filing Form number 9A, there are two separate circumstances. One circumstance is where you have actually received the donation and you are not in a position to spend that amount in the year of receipt. You can spend that amount in the subsequent previous year. Whereas if the income is accrued, you can spend the amount in the year in which the amount is actually received or the subsequent previous year. In subsequent previous year to the year in which the amount is actually received by you. So that means maximum, if the income is accrued, you have a play of 2 years, or if the income is actually received, you have a play of only 1 year. Whereas in the case of filing Form number 10, you have play till 5 years. That is the difference.
Okay. Next question is for a society which is running a school, registration under Section 12A is mandatory.
Definitely, you should register the school and you should have a registration under Section 12A because there are many benefits. If you don't register under Section 12A, you will not get the 15% accumulation, which is for perpetuity. You will not be in a position to file form number 9A just in case in a particular year. Now, let us take a classic example that a school collects the money in advance, correct? And spends the money collected in the subsequent year when the education is actually imparted to the students. So I have seen situations in many schools whereby in a particular financial year you receive the advance fees and your surplus is on a very higher side. So if you are registered under section 12A, you have the option of filing form number 9A. You can take that amount as a deemed application and that amount can actually be spent in the subsequent financial year for which it was collected in the earlier year. That is one classic example. One more example.
True, sir.
Now, suppose if you want to come up with a school building and you want to accumulate the amount over a period of 5 years. If you don't have a 12A registration, how will you accumulate that amount? And if you don't accumulate that amount, you will end up paying taxes in the year in which there is a surplus.
Okay. Second question is, in slide number 9, there is a para that the trust can be either wholly charitable or wholly religious. Can a trust cannot be a charitable and religious?
It can be. It can be. We are dealing with many organizations, many institutions, trusts, which are into charitable as well as religious.
The question is neither charitable nor religious.
Neither charitable nor religious.
Yeah, can a trust cannot be a charitable and religious? Means neither charitable nor religious.
I mean, it will not fall in the definition of 215 in that case, sir.
Okay.
It will not fall.
Next
The trust has to be either charitable or religious or charitable and religious.
Achha.
Yes.
Next question is, suppose voluntary donation received 1 crore, applied 1.5 CR, how to report in 10BB?
See, when you are spending 50 lakhs more, first of all, we have to identify whether that deficit of 50 lakhs is spent from loans and borrowings or it has been spent from, corpus which has been accumulated over the years. Suppose if it is spent from the corpus, then again the provisions will apply that 50 lakhs cannot be treated as application towards the objects of the trust in the year of spending. It can be treated as application towards the objects of the trust when the corpus is reimbursed. Similar is the case with loans. These are the only two possibilities which I can foresee. The third possibility is that you may spend, as of now, if you have funds lying in the reserves and surplus. How the reserves and surplus is formed? 15% accumulation, say you have accumulated a lot of amount. Suppose that amount is more than 50 lakhs. You may debit that, but as of now, the situation is we will debit that amount of 50 lakhs to the reserves and surplus.
Okay.
These are the three possibilities.
Yeah. Sir, since there are a lot of practical questions, so till you allow, I will keep on raising the questions from the participants.
Let us take one more question. So that then I can finish my syllabus basically.
Yeah, sir.
Yeah.
Next question is delay in at present. There are around 600 participants are there, sir. Online. Delay in filing audit report form 10B due to management issues by 89 days. Any case law helpful to apply or any CBDT circular with reference to the same, as it was rejected when applied under 154 also, under section 154 also.
No, can I get the
Should I
question
repeat?
back once again?
Delay in filing audit report form 10B due to management issues by 89 days. Any case law available to apply or any CBDT circular with reference to the same, as it was rejected when applied under section 154 also.
But I will have to know the year in which there is a delay in filing 10B.
Achha.
Because from 1718 onwards, there have been applicability is for assessment year 1718 onwards. It is the time when most of the things were made. The mandatory online filing was made. After that, they have come up with many circulars whereby the most important thing to be seen is whether the delay is less than 365 days or more than 365 days, but less than within 3 years. From 365 days to 3 years, yani 1 year to 3 years. So
True.
these are the two circumstances which has to be seen. In your case, the delay is 89 days. So there is a circular available to it.
Hmm.
So circular available to it, we can invoke that circular and make an application to the CIT that there is a delay of only 89 days, which will fall under his purview. He will go into the merits of the case and he will condone the delay. After the condonation of delay, after you get the order from the CIT, you can go to the concerned jurisdictional assessing officer and tell him that, look, my delay is condoned, and you give the effect of this particular order and nullify or reduce my demand as the case may be.
Okay.
Yeah.
Yeah. Sir, we continue with the presentation
Yes.
now.
Yes, sir. Yes, sir. Yes, sir. Now
Yeah.
we are on section 13 basically. Now 13 talks about, when we talk about 13.1, income applied for 13.1. What is 13.1? The situations whereby the deductions available under section 11 will be denied to you. What are those situations? Income applied for private religious purpose, income of charitable trust institute applied for benefit of particular religious community, except scheduled caste, scheduled tribe, backward classes of women and children. This is an exception. Then we have income applied for benefit of specified person. That means you are spending the income for the benefit of specified person, and specified person is defined under section 13.3, which we will see in the later slide. Then we have funds invested or deposited otherwise than any one or more of the forms specified in section 11.5. These are the situations. Correct? The circumstances where any part of such income or property shall be deemed to be applied for the benefit of person. These are the circumstances. What are the circumstances? Any part of the income or property of a trust or institution is lent without charging adequate security and or interest. Land building property of the trust or institution is lent without charging adequate rent or other compensation. Unreasonable amount paid by way of salary allowance for the services rendered. Now, these are the circumstances where you are saying that income is spent for the benefit of the specified person. Now, 13.3 talks about who is a specified person. This is the definition part. I'm not going into much detail into this. Then certain amendments have been made. Now, earlier, when we had form number 10B, then there were changes in ITR 7. There were certain reportings to be made regarding money spent on specified people. Now, the limit was a very meager limit of 50,000. Now, in the last amendment, they have changed this limit because there were representations made to the income tax department and to the finance ministry that 50,000 is a very small amount, and you are asking us to collect data for a period of last 10 years, and also not only of specified persons, the relatives of the specified persons also. So now they have come up with an amendment. Now they are saying that 50,000 limit has increased to 1 lakh, and there is one more limit which has been set, that over a period of 10 years, till the financial year in which the submissions have to be made, the donation should be more than 10 lakhs over a period of 10 years. Only in that case, it will be treated as a substantial contribution, and the reportings of that particular specified person has to be made. The relatives are not covered. The relatives are removed from that definition now. So this is the amendment. Person referred to in clause B of section 13.3 shall be any person whose total contribution is 1 lakh for the relevant previous year, and up to the end of relevant previous year exceeds 10 lakh rupees, as the case may be. The relative of any such person as mentioned in one above shall not be included. Then any concern in which any such person as mentioned in one above has a substantial interest shall not be included, because earlier we had to report this also. So it had become a huge challenge. Most of the people were not even reporting because it was practically impossible to give that information. So, and the department has very rightly taken cognizance of the same, and the necessary amendments have been brought into. Then we have 13.4. Exemption shall not be denied if the investment of the trust or institution in a concern in which the specified person has a substantial interest, provided such investment is not more than 5% of the capital of that concern. Suppose if there is a business entity and there is an investment of the trust in the business entity, the specified person is a partner or a proprietor or a person holding a substantial interest. But if a trust has invested only or less than 5% of the entire capital, it will not lose the charitable tag basically. Right? So that is the meaning of this. Now, what the 13.6 says that if a reasonable remuneration is paid, it will be allowed. Now, for example, if you have a medical institution whereby two trustees who are doctors also and promoters also, in short, they are specified people, they are rendering their services. And in return, if they are getting remuneration for that service, what has to be checked is the reasonableness of the charge. If the service charge paid to the trustees or the remuneration paid to the trustees is reasonable as per the marketing standards, you will not lose the charitable tag. Then 13.7 talks about anonymous donation, that everybody is aware what are the limits. 1 lakh rupees or 5% of the entire amount. Amount over and above 5% of the entire donation or 1 lakh, whichever is higher, will be treated as anonymous donation and the same will be put to tax at a maximum marginal rate of 30%. 13.8 says, due to 13.8, what is 13.8? 13.8 read with proviso to section 215, it says that if you cross the threshold limit of 20% of commercial activity in a particular financial year, you will lose the charitable tag for only that particular financial year in which you have reached the limit of 20%. Otherwise, you will get the exemptions provided you have not crossed the threshold limit of 20%. Let us take a practical example that if in a financial year 23-24, you cross the limit of 20%, you will lose section 11-12 ka benefits. But if in financial year 24-25, you did not cross that limit, you will get the 12-way registration ka benefit, that is section 11 and 12 ka benefit, provided your 12-way registration is in force. So that is what 13.8 means. 13.9 says that when you are filing form number 10, you have to be mindful that form number 10 is filed before the due date specified and income tax return is also filed on time as prescribed by 139(1). That is, if the due date is 31st October, the return has to be filed on or before 31st October and form number 10 has to be filed before 31st August, subject to any circular. If there is any circular, you can abide by the circular. Then we have 13.10. 13.10 is a very welcome provision. Earlier, what used to happen, let me take you to the background. Earlier, what used to happen is, suppose if you are not registered under section 12A, you file your return under ITR 7 or maybe ITR 5 as the case may be. Then the department, they used to do is, they will disallow all the expenditure which has been debited to your income and expenditure account. They will put you tax at the gross maximum marginal rate on the gross receipts. So that was leading to a lot of fictitious liabilities being generated by the income tax department. That is the reason over the period they came up with 13.10. Lot of representations were made, lot of rectifications were filed, and that is how they came up with 13.10 effective 1/4/2023. Now, what is 13.10? 13.10 says that where the provisions of section 13.8 are applicable or the trust institution violates section 12A(1)(b), that is, it has not got its accounts audited, or 12A(1)(ba), that is non-submission of return within the prescribed limit. Now, for example, if you are registered under section 12A, you were supposed, and the audit report had to be filed. The audit report had to be filed by 30th September. The income tax return had to be filed by 31st of October. You did neither. You did not get the accounts audited. you did not file the return on time. But of course, you are filing the return under section 139(4), that is before 31st December. In that case, you can invoke section 1310. You can say that I am invoking section 1310. There is a provision available in the return, and all the expenditure debited to the income and expenditure account will be allowed to you, subject to certain expenditures which are mentioned on the slide. That is, from if the expenditure are from the corpus fund, it will not be allowed. If the expenditures are done from any loan or borrowing, it will not be allowed. Depreciation on assets, the acquisition cost of which is claimed as application of income in the same or any other previous year, will not be allowed. In the form of any contribution or donation to any person. अगर आपने किसी को donation दिया है, that will not be allowed as expenditure. Otherwise, all the expenses will be allowed. So it is a welcome, very welcome provision, and the surplus will be taxed as per the rates applicable to the individuals. Then disallowance of expenditure without TDS we have already discussed. Then 1311, for the purpose of computing income chargeable to tax, section 1310, no deduction in respect of an expenditure or allowance or set off of any loss shall be allowed. That we have already discussed, that no set off will be allowed. Then there are certain explanations. I'm not going into much detail as far as the explanations are concerned. The PPT will be shared. For those who are interested in going through the PPT, that can go through the PPT. And if they have any question, they can definitely pose the questions to me. Then this is the chart which I was discussing about. When the application has to be made, what is the timeline, what is the validity, what is the form in which the application is to be made, and what is the form in which you will get the order from the income tax department, whether approval or rejection. So this chart is very self-speaking. You can go through the chart. This is about 12A. Now, 12A may, again, there are a lot of amendments of late. Now, the highlighted ones I am going through. Provided that where the application is filed beyond the time allowed in subclause 1 to 6, the principal commissioner or commissioner may, if he considers that there is a reasonable cause for delay in filing the application, condone such delay, and such application shall be deemed to have been filed within time. Of late, everybody must be aware that the condonation powers have been given to the PCIT or CIT. What is this condonation for? Subclause 1 to subclause 5. Subclause 1 is re-registration. There are many organizations who have missed the bus regarding the re-registration. They can, now the functionality is available for subclause 1, it is still not available, but for the remaining subclauses, the functionality is available. Wherever you feel that there is a delay in filing the respective application, you can avail the facility of condonation, and you can write to the income tax department online, and then on the basis of your merits, your condonation will be accepted and you will get the registration as the case may be. But all said and done, 12A condonation powers are given to the CIT, but ATG, there are no condonation powers given to the CIT. That means you cannot get the delay condoned in filing ATG applications, ATG approval applications. Then earlier, for subclause 3 applications or subclause 2 applications. Subclause 2 is what? You go for registration after the expiry of 5-year period, you have to avail subclause 2. Subclause 3 is what? For converting your provisional registration to a regular registration. Earlier, the period was within 6 months from the end of the month in which the application is made. But now that has been extended within 6 months. Now the new time limits are within 6 months from the end of the quarter in which the application is made. That means if you are making the application in the month of May, the quarter end is June, and the application can be disposed of by the income tax department on or before 31st December 2025. And this amendment is effective 1st October 2024. Earlier, the registration was given for a period of 5 years. Now it has been extended up to 10 years. A lot of representations were made regarding this to the income tax department, saying 5 years is too small a period for small trusts. So for smaller trusts, now the validity has been extended up to 10 years. and this amendment is effective from 1st day of April 2025. That is, any application made from 1st day of April 2025 can be considered for a period of 10 years based on the size of the trust. Additional compliances 1023C and Section 11 ka merger has led to many additional compliances both in the case of 1023C as well as Section 11. I have written down everything. I am not going into details as far as this is concerned. So the participants can go through the PPT for this. ATG, there is nothing, no significant thing to cover. The only thing is registration part. And now, again, the timelines of 6 months from the end of the quarter in which the application is made is applicable to ATG entities also. One thing which I would like to specify over here is that any donation in cash above 2,000 will be not considered for deduction. That means if you make a donation of 1 lakh rupees in cash, you will get a deduction of only rupees 2,000. But of course, the charitable organization can issue a receipt of rupees 1 lakh subject to a limit of 2 lakhs, which is described in 269 SS or 269 SS, I believe. So that has to be seen that a charitable organization should refrain from accepting any donation in cash more than 2 lakhs. And anybody who is giving a donation of 2,000 more than 2,000 in cash will get a deduction of only up to rupees 2,000. The remaining conditions, ATG, etc., are mentioned over here. The PPT is very elaborate. Each and every participant can take the advantage of the PPT. If there is any issue which the participants feel has to be flagged, I am definitely open for corrections and suggestions. So please write to me so that I can make the necessary changes. So this is about ATG. Rationalization of timeline we have already discussed because I think we are running short of time. Then ATG, yes. ATG, yes. Now ATG mein there are many queries which I get. I would like to discuss those queries. Now suppose if you get a trust who says कि भाई sir मुझे आज ATG का approval चाहिए. Now in that case you have to see whether the trust has started with the activities. If the trust has started with the activities, you can straight away avail 4B, subclause 4B. There is proviso 1 to ATG 5 whereby subclause 4B is there. You can straight away make the application under section 4B, subclause 4B rather, so that you get the registration under for a period of 5 years or 10 years as the case may be, depending on the size of the trust. But of course, ATG ka approval will go hand in hand with 12A registration. Now suppose if your 12A registration is expiring on say 31st March 2027 and if you make an application for ATG today, first and foremost, you will get the approval of ATG only up to 31st March 2027. Your ATG will be brought hand in hand with 12A, and then going forward, after 31st March 2027, you can make both the applications together and they can go simultaneously for the period of 5 years or 10 years as the case may be. Then this is about 115TD, accredited income, nothing much. If the 12A is cancelled or withdrawn or as the case may be, if you are violating, in that case 12A will be cancelled and 115TD will kick in. 115TD is nothing but accredited income. Accredited income is calculated on the market value of the total assets minus the market value of liabilities, and the tax levied is maximum marginal rate. So other than that, there is nothing much to mention over here. Of late, 12AC has been introduced, whereby if you are merging one entity with another entity, the provisions of accredited income will not kick in, subject to conditions mentioned over here. And these amendments are effective from 1st day of April 2025. Anonymous donation we have already discussed. Case laws are there for the benefit of the participants. Then we have special rate of taxation. Specified income. Explanation: specified income means specified income has been explained, and wherever there is a specified income, that specified income will be put to tax at the maximum marginal rate by virtue of this section. 10BD has to be filed. Due date is 31st May. and delay in filing 10BD will attract a late fee of rupees 200 per day, and one-time penalty also has been prescribed in for delay in filing 10BD and generating form 10BE. Oh, this is what? 271K and 234G. Sorry. This slide talks about, when you spend money for the benefit of the specified person. If you spend money for the benefit of specified person, there is a penalty prescribed of 100% on first violation, and then on subsequent violations, 200% is prescribed. Now, for example, if you spend 1 lakh rupees for the benefit of specified person, and on the first violation, you can be levied a penalty of 1 lakh rupees. And if there is a subsequent violation, the penalty can be increased to 200%. 143.3 we have discussed that the issue can be flagged to the PCIT for cancellation of 12A. 164.2.3 read with 167B. This is the section which talks about the taxation of charitable or AOPs where the beneficiaries are not defined or the shares of beneficiaries are not defined. Right? So this is about 164.2.3 read with 167B. ITR 7 vis-a-vis ITR 5. When should we file ITR 7? We should file ITR 7 when the organization is registered under section 12A. Otherwise, we should file ITR 5. These are circulars. The circular query which we had, you can go through these slides to find out the circular which suits your purpose. Certain case laws for the benefit of the participants. Then we have form 10B and 10BB. Now, there is always a question when you should file 10B and when you should file 10BB. You should file 10B under 3 circumstances. Either the receipt in your particular financial year is more than 5 crores, or you are registered under FCRA 2010, or you have spent money abroad for the benefit of the public at large, of course, after taking permission from the CBDT. Or if you must have spent on the objects outside India in which India is interested. In these 3 circumstances, you have to file 10B. The other 2 things which I have said, that if you are registered under FCRA, irrespective of your turnover, you have to file 10B. If you have spent money outside India, irrespective of your turnover, you have to file 10B. Otherwise, for all other practical situations, you have to file 10BB. Book notification number 94 specifying the books of accounts to be maintained, the place where the books of accounts are to be kept, the time for which the books of accounts are to be kept, and the procedure to intimate to the income tax department in the case of change of the registered office. So you may go through this notification in detail, which is very important. The necessary changes have been made in form number 10. Earlier, 1023C was not added to form number 10. Of late, 1023C has been added. Now again, 1023C has been merged with section 11. So 1023C will again be removed. And by the time you will get the income tax bill, so the entire thing will change again. So this is my syllabus for today. And I am open for queries once again. Sir, back to you. Pradeep ji, back to you.
Yes, sir. We can have few questions
Yes,
till
sir.
the time we permit,
Yeah.
sir.
No problem, sir. You can have as many questions as you want.
Uh, yes. Hospital maintained by Rotary Club under charitable nature. The society also have the medical shop having GST and drug license. Whether it is still be treated as business or sales included in gross receipts. The medical shop also doing trading in generic medicines also. Generic medicines only.
Right.
Please advise how to treat the same for income tax purpose.
So what I understand from this question is that Rotary Club must be dealing into many objects. I am looking after many Rotary clubs.
Yeah.
They are having various objects. So in this particular case, if you are running an hospital whereby you have many other incidental and ancillary activities, I would strongly recommend that you should maintain separate books of accounts for the hospital venture or the medical venture which Rotary is running. and whatever surplus generated from that activity. If there is no surplus, it is fine, but definitely there has got to be some surplus. That surplus can be plowed back again to the income and expenditure for other purposes or for the same purpose also. But all said and done, a separate book of account has to be maintained for the hospital venture or the medical venture. But otherwise, over and above that, there should be no other issue of 12-way cancellation or 12-way rejection or any other violation which I can foresee. But of course, the books of accounts have to be maintained in a proper manner to justify.
Second question. Yeah. Second question is, sir, how is it possible to file Form 10A by August when the due date of audit report itself is September?
I understand that that is the reason the representations were made in the financial year last. I mean, related to financial year 22-23. 22-23, this same issue was discussed and we made a representation. That time the issue was time, but this query still persists. There is a circular saying that you can file form number 9A, 10 and other forms before the filing of the income tax return. But that circular, as I told you, has got to be more precise. I can fully understand that without the accounts being audited, how we can file the relevant forms. But this has to be checked by the department now. Otherwise, we are trying to get it done because the only thing remedy available to us, we finalize the account by 31st of August. That is the only remedy available to us, so that we can file form number 10 or 9A or the relevant forms.
Sir, that question regarding the FRI, whether the autonomous body, just like FRI here means Foreign Research of India, Dehradun. It is mandatory, whether the autonomous body, just like FRI, is mandatory to require registration under Section 1023C, where whole financed by the central government of India.
See, generally, I don't see any registration required over here because FRI, as you said, that it is neither an educational institute, I believe, and nor
It's an
medical.
educational institute.
It is an
They have
educational.
mentioned it's, yeah.
If it is an educational institute, then definitely it is falling under 1023C 3AB. 3AB. Now, over here, the funding, as you said, is more than 50% by the government, directly funded by the government.
Yes.
So you need not take a registration. You are not supposed to take a registration.
Okay. Second question is, the trust has already started its activities before obtaining provisional registration. In this case, whether the trust can go straight away for permanent registration?
Yes, ideally the trust should directly go for registration for a period of 5 years or 10 years, as the case may be. But of course, the other things have to be seen, whether they have, when is the provisional expiring. We have to get the details basically, because there have been a lot of changes, there have been a lot of condonations, and there have been a lot of extensions regarding the due dates. So we got to have all the details in place. Only then we can guide that what we can do in this particular case.
Yeah. And sir, a follow-up question for the regarding the scheduled commercial banks, where it is that the current account, it is with the scheduled bank, but for deposit account, it is written public sector bank in section 11 subsection 5. Please highlight.
Right. So public sector bank means, sir, I mean, everybody is aware that we call PSU banks, like for example, State Bank of India and all those things. So both the things are covered, sir. You can. What I would like to tell you is, even if you are purchasing a fixed deposit with ICICI Bank, it will be treated as compliance under section 11(5).
Second question is, society selling wigs made by SHG, self-help group, to whom organization provides cotton and pay them labor charges also. Are these expenses of cotton and labor is treated as application of fund for charitable purpose?
Definitely, sir, because first of all, I will have to see the constitutional document and the objects for which the trust has been made. Now, suppose something needs to be manufactured. Now, without, I mean, the realization which you will get, the consideration which you will get, is for the product as well as the services. Until and unless the expense is not allowed, it is difficult to calculate the surplus or the deficit as the case may be.
Next question is, in earlier slide, cooperative society was shown as an eligible institutions for investments under section 11.5.
Cooperative
I think
society.
there cooperative, I don't know. Means we can take to second question. Another question: can an
Yes.
educational institution registered under section 12 AB claim deduction under section 1023C triple AD if the gross receipt is less than 5 crore?
No, sir. See, 11.7 mein there is an amendment which we have already covered in the slides that you can either avail deduction under section 1023C or you can avail
Hmm.
deduction under section 12A. Now, suppose
Hmm.
if the trust is already registered under section 12A, then it
Hmm.
cannot file the returns under section 1023C.
Okay. Sir, follow-up question regarding the alphabet T in the PAN card.
Right.
How to rectify if PAN letter T instead of A?
Hmm.
Please tell us any procedure to rectify it if society registered more than 6 years now.
No, my take on this will be that if you are getting a T letter, if
Hmm.
you are getting a T letter and your organization is a charitable organization, this should
Uh,
not bother the particular trust, because generally that is what the organization wants, because A letters gives a challenge. And I
yeah.
will also have to see that whether this trust is registered in Maharashtra.
Okay.
If it is registered,
No, I think it is from the Dehradun. The member is from Dehradun, so somewhere in the north,
member
I
is from
suppose.
Dehradun. So
So I
Dehradun
suppose,
means it is Uttarakhand.
yeah, Uttarakhand.
In Uttarakhand, whether we have a charity commissioner or not has to be seen, because now if you are registering under Society Registration Act in Maharashtra, you get a trust ka certificate by default.
Okay.
So if you have a charity commissioner over there, you will get the certificate of trust by default. And
Okay.
if you ask me, if the
Hmm.
trust is registered as a charitable society under the Society Registration Act 1860, and suppose
Hmm.
there is no provision for a trust ka certificate also, even in
Hmm.
that case, if there is a T letter as the
Hmm.
fourth letter of the PAN, I don't think
Hmm.
it should be a challenge. I don't
Okay.
think we should go for a conversion from T to A. And the other
Okay.
thing is, it is not possible also, sir.
Ah.
The constitution change in the PAN card form is not possible, sir.
Hmm.
You
Uh,
got to, in that case, you have to apply again. You have to apply again, and you have to say in the application that this is an association of person. You will get the A letter in the PAN, and you have to surrender the earlier PAN, which is with
hmm.
the T letter as the fourth letter.
Okay. Next question is, the trust is providing higher education as well as they have art gallery.
Hmm.
The trust is received grant from abroad for EU project under FCRA Act.
Hmm.
My question is that GST is applicable on these grants. Further, what will be the accounting treatment for utilization of grant amount as trust HO is in Mumbai and
Hmm.
education institute is at NCR,
NCR. Okay.
North
I
Capital
I
Region.
I think this needs further details, because it is a question of FCRA. So
Yeah,
many parameters have to be seen in this.
true.
And GST, of course, GST is not my forte. I will have to
Yeah,
consult with my GST team. But then
true.
too, all said and done, that if it is a FCRA approved organization and you get a FCRA grant for a particular project, a separate account for that particular thing has to be maintained. And GST, I will have to further ask that why GST will be applicable. Are we selling something? As far as education is concerned, there is no GST. GST is exempt for educational entities.
Mm.
So, but all said
Uh,
and done, I will need, elaborate details on
true.
this.
Next question is Section 11, subsection 2 application should be excluded from the current year application. I think it is somewhere connecting, but it is missing there.
Hmm.
Next question is what are the consequences if an institution registered under Section 12A or 1023C4
Hmm.
voluntary surrenders its exemption despite its receipts being below the revised threshold limit of 5 crore, number one. And
Hmm.
second is what are the implications if the corpus funds that were utilized a long time ago are still being shown as liability under corpus fund in the balance sheet? What is the correct treatment after the corpus has been used?
What is the correct treatment after the corpus has been used?
Used.
I mean,
So
this.
first question, if I repeat,
Ah,
what are the consequences if an institution registered under section 12A or section 1023C4 voluntarily surrenders its exemption despite its receipts being below the revised threshold limit of 5 crore? This is the first question.
Right, sir. Now, see, when you are saying that we are surrendering 12 the exemption under section 12A or 1023C4, I mean, first of all, you can't have both. First thing is
Uh,
either you can have registration under section 12A or you can have registration under section 1023C4. Now, once you surrender that particular thing, first of all, we'll have to get into the nitty gritty why you want to surrender. And just in case if we take it on the face value that you are surrendering it, then I'm afraid 115 TD will kick in. We will have to look at the all the balance sheet items. Whether over the period you said that corpus also has been accumulated, are there any fixed assets in the balance sheet? If there are any fixed assets and you surrender 12A, there is a possibility of accredited income or 115 TD being kicked into. So that has to be verified. That has to be verified with all the facts and figures. Only then we can, give a proper opinion on this.
Yes. Next question is, uh, trust missed the ITR filing for assessment 24-25.
Hmm.
How ITR U file can be filed where there is no tax liability? Is there any way out to file ITR for assessment year 24-25 now? I think something is missing here.
Yeah,
We
it is
will.
about ITR user, updated return. Yes,
Ah,
we can definitely file updated return. There's no doubt
ah,
about. The only thing is ki the late fee which is there, because since the income is below 2,50,000 or maybe below 2,50,000, you will end
ah,
up paying that late fee. That's it. You can file ITRU, but it
okay.
has to be checked whether it is required or not.
Okay. Next question is, if a trust is into charitable and religious both activities,
Right.
each trust is not eligible for section 11 exemption.
See, when you have a charitable trust, whereby
Ah,
the activities are charitable as well as religious, you can definitely get 12A registration, but ATG will become a challenge subject to the fact that if the expenses on religious activity are more than 5%, you will not be eligible for ATG. But 12A registration definitely you will get.
okay. Uh, is the rebate under section 87A available to the charitable trust?
No, sir.
Okay. Next question, which book would you suggest for practical understanding and applicability of section 8 company taxation?
Section 8 company tax, because taxation, sir, as far as taxation of Section 8 company is concerned, it is all governed by Section 11, 12, 13. There is no separate thing for taxation as far as the Section 8 company is concerned. For all
Okay.
practical purposes, all these chapters and sections which we have just discussed are applicable to a Section 8 company also.
Yes. Next question is, under new tax regime, ATG deduction is removed.
Yeah.
Then what is the benefit for an NGO to have an approval under ATG?
There is no benefit as such, sir. Just in case, I have come across many organizations, they are still wanting ATG because ATG gives them credibility.
Uh,
ATG makes them eligible to file CSR1 because
uh,
ATG is a precondition to obtaining CSR1 registration on the MCA.
mm.
So that is the only reason which I can foresee. Otherwise, there is no such reason now.
Next question is whether inter-trust non-corpus donation between trusts having common trustees
Hmm.
is hit by section 13.
No, 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 not hit by Section 13, sir. Inter-charity
Okay.
donations, whereby the trustees are more or less the same, it is not a problem. Two separate entities. The only thing is trust to trust donation, 15% of 11-1 accumulation will be disallowed to you.
Next question is, there was delay in Form 10 and ITR filing. We applied with CIT exemption for condonation of delay in filing the Form 10
Hmm.
and ITR. However, the CIT exemption rejected the application specifying that the reason is not sufficient for unavoidable circumstances. The addition is made in the order passed under section 143(3)
Hmm.
and CIT appeal order also passed mentioning that if the condonation of delay is accepted, then the AO can make the rectification. What can be the next step for the same?
IT, sir.
IT. Okay. Next question is, will anonymous donations also cover collections in a donation box kept at the center like temples, etc.?
No, sir. Generally, in my PPT, you will find many case laws related to temples and gurudwaras, whereby the honorable, ITAT or the high courts have decided that dan peti, whatever collected through dan peti, should not be treated as anonymous donations, because the sole idea of introducing this section 115 BBC, read with section 13(7) is to check on, transactions with malafide intentions. The collection in donation boxes are not with malafide intention, basically. Of course, the donations are made and the people who are giving the donations cannot be identified. So in a way, straightly going by the meaning of anonymous, it is an anonymous donation. But the intent behind that anonymous donation has to be checked for taxation purposes.
Uh, Sir, we are having at present around 650 participants. Next question is, disallowances akin to 43B, etc. are supposed to be resulting in reduction of amount applied, but ITR 7 and CPC takes it as taxable income. But this is the just question. They have, I think, observation they have made it.
Yeah, I didn't understand. Yes.
Disallowances akin to 43B, etc. supposed to be resulting in reduction of amount applied. But ITR 7 and CPC takes it as taxable income. No, I don't. I did. Next question we take it. Is it necessary to file 10BD if trust obtained provisional registration?
See, what I would suggest, generally what I have seen in my practice is कि we have to decide on a case-to-case basis. Now, suppose even if by not filing 10BB, even if by not filing 10BB, if the income is not taxable, then in that case, until and unless we don't get a regular registration, rather than filing ITR 7, if you are filing 10BB, you will have to file ITR 7. But if you don't file 10BB, you can file ITR 5. If the income is not much and if it is below the taxable limit, then in the scenario of a provisional registration, I would strongly recommend that you should go for filing ITR 5 by not filing 10BB, for the simple reason that just in case if the regular registration gets rejected, all the earlier years where you have availed section 11 deduction by filing 11(7), by filing ITR 7 will be reopened. That has been seen in the common practice that if the 12A is rejected, the income tax department is reopening all the earlier cases. The tax implication may be meager in that case, but then too that will lead to a lot of hardships. So let us decide on a case-to-case basis. If there is not much income, rather than going for ITR 7, we should go for ITR 5. Even if we have, in the case of we having provisional registration.
Okay. Next question is, if an NGO does not accept government grants, is it still mandatory or advisable to get itself registered at Darpan portal?
Darpan portal is a must nowadays, sir. Because if you are a charitable trust or an NGO, we may call it in common parlance, everywhere, because if you are operating a bank account with a bank, nowadays each and every bank is insisting on Darpan registration as a sort of KYC, you may call it. So Darpan registration has become more or less mandatory now, sir.
Okay. Next question is, if two institutions are run by the same society and registered under section 12A, and now they wish to separate, where one institution is taken over by another society along with all its assets and liabilities, what are the income tax consequences for the original transferring society?
Original transferring society, one society has got two institutions. One
Yes.
institution is being retained by society A and the other institution is being taken by some other institution.
Society A is taking over the B society.
Okay, okay. You mean to say society A is running one institution
Ah,
and there is one more institution, say so institution B, it has got another institution and they are
ah,
taking over the reins of institution B, basically society
yeah.
B, sort of.
I am repeating the question. If
Yeah.
two institutions are run by the same society
Uh,
under uh, registered under same society under section 12A,
uh,
and now they wish to separate,
hmm,
where one institution is taken over by another society
hmm,
along with all its assets and liabilities.
right.
What are the income tax consequences for the original transferring society?
No, but
It,
but whatever the transferring society, if it is
uh,
transferring one institute to
uh,
another NGO or another trust,
uh,
you may call it say trust B. Trust A is
uh,
transferring one of its institute to trust B. That is the
yes.
simple case. Now, if
Uh,
we are getting any remuneration out of it,
uh,
if we are getting any remuneration out of it, that will reflect in your income and expenditure account.
yes.
Otherwise,
Uh,
if we are giving over that institute just for the sake of better management and there is no financial consequence as such, then in that case, you need not worry about the taxation part.
hmm. uh, of its follow. The next question is whether donation can be accepted from NRI from his NRO account without FCNR registration.
Yes, if he is an NRI can definitely give donation to a trust without FCRA registration.
Okay. Now at present, last question so far.
Hmm.
Sir, if ATG rejected due to late filing, rejected on 3rd Feb 2025,
Hmm.
can the donor get ATG benefits? Provisional was to be renewed on 1st April 2024.
Provisional was to be renewed on 1st April
1st April 24.
2024
And rejected due to late filing on 3rd Feb 25.
and 3rd Feb 25.
And can the donor get ATG benefits?
See, my take on this is let us take a practical approach on this. Now, in the financial year, if I am understanding correct, the donation has been given in the financial year 24-25. And the donor who has given the donation, the
Hmm.
provisional registration certificate was given to him
Hmm.
to justify that we are registered under section 80G or we have
Hmm.
gotten approval under section 80G. So we
Hmm.
can definitely use that URN. We get the unique registration number in all the orders, whether it is provisional or regular.
Yes.
So as far as the donor is concerned, they should not have any challenge because they have a valid URN. And the
Hmm.
department has still not gone to the donor's end in any of our cases, whereby the department says, Ki bhai, justify your donation or justify the deduction which you have claimed in your income tax return. So I don't think it should be a challenge. But of course, uh, on plain grounds, it is not a fit case for claiming deduction. But
Yes,
practically,
sir.
we are not facing any challenges in many of our cases whereby the trust was provisionally registered, the URN or the provisional registration certificate was given. Ultimately, it got rejected when we were going for regular registration. But they claimed we filed 10BD for those clients because at some places the amount was high or the donor was insisting on the 10BD and 10BE. So we had to do that. But practically, the department is not taking it very seriously and the department is not penalizing the donors as such. That is what we have seen in our practical experience.
Sir, with this, we conclude the question answer session.
Thanks.
And let me share a few of the general questions which they have asked.
Yeah.
One regarding the video recording. So,
Hmm.
the video recording and the session will be available on ICI TV in 2 3 days down the line.
Hmm.
Regarding the presentation PPT, we request to the faculty, sir, if they permit us and allow us, sir will share to the DirectX committee and committee will in turn share to all the participants who have registered there with the webinar. And sir, we have around 630 participants
Wow,
and
great.
around 100 plus questions, rapid fire questions. We took it, and with your practical approach, lot of participants have enjoyed it,
Thank
and
you.
they keeps on coming up. We are very much thankful to the faculty sir Ravi Gupta ji for his thoughtful, insight, practical approach with the study, with the case study basis. Lot of participants have enjoyed. We are thankful to the ICI Tech support, to the Direct Tax Committee, to the chairman and vice chairman, Vishnu ji and the Piyush ji, for giving us the opportunity to take up the session. Sir, if you want to share anything.
No, no, it was a very pleasant experience as far as I am concerned. I'm so happy that there are so many participants and so many people have logged in. I can understand how important this subject is nowadays with all the changes that we have been seeing. And
Yes.
most importantly, the team of ICI. I mean,
Yes.
people are fantastic. The chairman,
Yes.
the vice chairman, the moderators, the support staff, the technical staff. I mean, they are so helpful. I mean, I think Sharma madam, if I'm not wrong, she had been
Yeah. Rudraksha
coordinating,
Sharma.
Rudrakshi ji,
Yes.
she had been coordinating with me for the last 3 or 4 days, right from the
Yeah.
day when Vishnu ji contacted me. And I would
Uh,
like to thank Vishnu ji specially because he has been instrumental to me in arranging this particular session and he has recommended me in many places. So a special thanks to Vishnu ji if he is on board, or else you convey my thanks to him. So, and I
sure.
will
Sure.
definitely convey my thanks because I have his number. I will
Yeah.
definitely
Yeah.
call him.
And
So,
sir,
with
though
this,
the session was up to 6:30, we are at present at 7.01. But still, we if we say in the present era or the scenario that sir आपके जो इतने कैलिब्रेटेड सटीक जवाब थे कि सभी प्रश्नों के जवाब आपने एकदम सही
thank you
से
so much.
दिए.
Thank you so much, sir. फिर भी कुछ सवाल रह गए सर फॉर वांट ऑफ फर्दर डिटेल्स. अगर फिर भी
Yes.
वो लोग मतलब मुझे अगर इफ दे राइट टू मी I will definitely, I can talk to them also personally and I can handle their query one to one so that, I can give them satisfactory reply because in the want of information, I am also in a dilemma that how I should conclude that particular subject.
We are thankful to all the participants across the country who had actively participated, share their questions, and sir had tried to reply to the best possible with the given framework of the questions. We are concluding here. Thank you, sir. Thank you, participant. Thank you to all the ICI DirectX committee and the tech team. Thank you.
Thank you
Thank
so
you,
much.
sir.
Thank you so much.
Thank you, sir.
Thank you.
Thank you.